In this chapter, we are talking about the accounting that goes on at the front office, okay? So everything that happens at the front office. We're going to talk about a couple different types of accounts. We're going to talk a lot about different terminology, different vocabulary, and so hopefully these are things that you will hear on the field trips when we go out on the field to the different hotels. All the processes that happen, because essentially what we're doing is we're trying to make sure that we as the hotel collect the account and collect on those accounts that we're charging, everything we're charging for the guests. And so for this first one, so we're going to go through each one of these different bubbles here throughout the presentation today. Let's kind of talk briefly about them first. And so as a front desk, we basically have to create the different accounts. And those accounts for the different things that we're doing are called folios. So every guest is going to have a folio that's associated with that specific room, okay? Where we collect this, where we get all this information from, is our different points of sale. So what is a point of sale? What is that? Okay, so it's a cashier.
Is it like anything that you purchase that's not your brand?
Okay. Yeah, so that point of sale would be the sundry shop or the restaurant. What's another example of a point of sale? What's that? Laundry. Okay, so if you have a guest laundry area, we might be collecting something there. It's basically anytime when we collect money or we are going to charge to a guest's account. So what's another area of the hotel that they can... Valet is another point of sale. What else? The bar. The spa, absolutely. Anna is all about the spa. Every time we talk about amenities, the first thing she thinks of is the spa. That's awesome. Okay? I love the spa out at the Hyatt Hill Country. What else? What about the TV? Can the TV be a point of sale? We can purchase video games. We can do pay-per-view movies. So that can be a point of sale. Okay? And so that we're going to talk about point of sales and how integrated it can be in our property management systems. Okay? We're going to settle our accounts. We'll talk about how we settle those accounts. The internal control, that's where the night audit comes in, where we're going to be looking at those different types of accounts to make sure that we are charging appropriately and that we're collecting when we need to. Vouchers is something that we'll talk about in a little bit of detail. And then we have two different ledgers. Okay? Does anybody in their notes from reading the chapter, do you remember what two types of ledgers we have? We have a city ledger and we have it's a guest ledger. So the guest ledger is associated with the guests that are staying there in a guest room. The city ledger is associated with non-guests. Okay, and we'll talk about the difference between those two. Good. So an account is just basically how we track that data. Okay, how we track the different transactions that are taking place. Okay, how many of y'all have taken an accounting class before? How many of you have never taken an accounting class? Okay, I encourage you to do so. I believe if you're going on to University of Houston, you will take accounting at the junior senior level. But if not, you can take just general accounting, and that's what kind of help you with this business type. Because accounting math is actually relatively easy because we have what's called a T account. Okay, one side is our debits and one side is our credits. Okay, so our debits add to our account and our credits take away from our account. Okay, they reduce our account. So what would be an example of a debit to a guest's account? What would add to increase their account? Their room rate and tax. What else? A restaurant bill if they charge it to the room. What else? Okay, coffee. Anna's saying this. Anna's waiting for it. She's like biting her tongue. Yes. The spa. Yes, absolutely. Okay. The mini bar in our hotel room. Anything that we can charge to the room is going to increase on the debit side. Okay. The credit side is where we post all of those payments. Okay. And so accounting math is actually relatively easy because your debits need to equal your credits. And if they don't, then you got to figure out why they don't. Bless you. And so, yes.
If you take like a career as an accountant or something like that, you could work.
Yeah. Yeah, because somebody has to, if you have like an accounting degree, think about that organizational chart that we have from the hotel. There's the finance department. They're the ones who are responsible for making sure that all of our accounts are balancing. So absolutely, if you have a background in accounting, there is a place in a hotel for you. All right. So the account balance is calculated by subtracting the T account right side from the left side. So we're basically going to apply all of those credits to the debit side. Okay. Now, if something is fully automated, so if our property management system is fully automated, then oftentimes you'll actually see all of the charges and listed by date, and at the very end you'll see the one payment. Okay, or you might see the payments for each day as we post the payments for those room rates. And typically, when you're seeing it in that sense, you're going to see the posting, the credit. Oops, that should be a period, and that should not be anything at all. You'll see it in parentheses, and that parentheses essentially means subtraction. Okay. Or you might see the actual the subtraction sign, but primarily when you're looking at invoices or you're looking at folios or receipts, that parentheses indicates a payment or a credit to the account, okay, to get that. So let's do something. Go ahead and pull out a piece of paper. And we are going to work on creating a T account together. My computer's running very slow right now. I don't know why. Okay, so let's look at this different criteria that we've got here. So our guest is staying, checking in on 10/1, October the 1st, and then checking out October the 4th. Okay, the room rate is $100 per night, and the tax rate is 16.75%. So what we might, what's the next point? That covers our room rate and tax. So they are a guest. So what's the next one? It covers what? What's the next bullet point cover?
Breakfast.
Food and beverage. Okay. So they've got breakfast for $15, dinner for $45, and then lunch for $27.50. The third one is valet service, parking service. Okay, so $25 per night. And then on 10/2, the guest paid $375 cash. What is the remaining balance due upon checkout on 10/4? Okay, and so if you were doing something that is if all your accounting is done by hand and not done automated, you would create a T account for this. Okay. So let's do our T account. Yours is gonna be a little bit bigger than mine. Okay. Left side is what? Debits or credits? Left side is debit. Okay. And the right side is credits. Think of DC Comics, right? Or reverse alphabetical order, whatever you want to do, whatever makes more sense to you. Okay. So debits and credits. What do we do to the debit side? Do we add or subtract? We're adding it to there. So those are all the charges that we have. Okay, and so on 10-1, we would do a debit of $100 for the room. Okay, so we would do $100, and then we would do $16.75 as the tax. Okay, and you're going to write what that is for. So we have the room rate and we have the tax. R and T, room rate and tax. Was there any food or beverage purchased on 10-1? No, they didn't. Okay, so we move on to 10-2. So 10-2, the first thing is room and tax. That stays the same. $16.75. But now we have lunch, breakfast and dinner. So we do breakfast is 15 and dinner is 45. Now, because this is a total number, we're going to assume that this is $15 for their meal and tax and gratuity already included. Okay, that looks like an 8. Let me fix that.
Then do it by day, because then we would be missing the valet.
Ah, good job. I missed that. Valet. Okay, so let's add valet up here for 25. And then valet at the bottom as well for 25. Okay, so you guys keep your T account going. I'm going to erase this so I have a little bit more space to work. All right, so now we're on 10-2 is done. Now we're on to 10-3. So 10-3, what's the first thing? Room and tax, okay? So room and tax is 100 and then $16.75. Okay, we're going to assume that we are not at a T-PID hotel that has the 1.25% fee. Okay, and then we have valet, so we want to make sure we get that, $25. And then what else is happening on the 3rd? We ordered room service. Okay, so in-room dining, IRD for $27.50. And then what else happens on the 3rd? Actually, it was 10-2. I need to change that. I'll change it to 10-3. So on 10-3, the guest made a payment of $375. So we add that to the credit side. Okay, and then on 10-4, when the guest is checking out, now what we can do is we can add up all of our debits and we have our credits. So our credit is $375. And what was our total debits? Calculate your debits and then compare your answers with your neighbor and see if you got the same thing. Check your work. What do you think? What do you think? Oh, you're going to use your calculator?
Yeah.
Cool. We're just getting just the debits right now. Just the debits. All right, Rebecca, what did you get? 512.75. Did anybody else get that? Good. When I did this, I was like, oh, that's the Austin area code. Okay, so 512.75 is our debits. Now what we do is we subtract all of our credits from that. So now we can subtract that 375, and what do we get? 137.75. And so that is our balance that is due. Okay, and we're going to settle that account, whether they're going to pay with additional cash or whether they are going to pay with a credit card or whatever. Okay, so that's how we do this debits and credits. So you can see having an automated system can help refine this process. We just also have to make sure that all of our payments or all of our charges are posted to the folios. Okay. So we have difference between a guest and non-guest account. The main difference between the guest and non-guest account is the guest is staying at the hotel and the non-guest is not. Okay, so a guest account, somebody who's staying there, what would be an example of a non-guest account?
Someone using one of your rooms, like your banquet room.
Okay, so if they're using the meeting space, but they're not actually staying in your hotel. So let's say we have, the company that's 2 blocks down, they're going to have a manager meeting at our hotel. They're going to have food and beverage. They're going to have training, and they're going to use our meeting space. We're going to charge them. We're going to have an account for that. That's going to be the non-guest account because they're not staying. They're not utilizing sleeping rooms. Okay. What about somebody who just comes in to eat at your restaurant? Is that a guest or non-guest account? It's a non-guest account because remember the main thing with the guest account is that it's associated with a sleeping room. So same thing with a spa or the golf course. If you're not sleeping there, if you're not staying at the hotel, then it's actually a non-guest account. So I can't think about it this way. A non-guest account is one that I cannot charge to a guest room. I can't say I'm going to charge my spa services to my guest room or I'm going to charge my restaurant meal to the guest room. I have to settle that right then and there at that point of sales with that different wherever I am. Okay. Questions about that? Whereas the guest accounts, those are typically settled at what phase of the guest cycle? At the departure phase, the checkout stage. Good. Typically, other things that we can change into a non-guest account if we have any of those late charges. Remember, a late charge is something that happens when what happens?
They check out before all the charges have been.
If the guest checks out and leaves before everything is posted to their account, then a late charge is added. And so we might move that to a non-guest account since there is not a guest room to associate that with. So any kind of non-payment things like that we might do. Let's see, what else? For non-guests, really just those restaurants, if we're doing any kind of meetings, things like that, all that's going to be in those non-guest accounts. What's that? Yeah, if they're just paying valet and they're attending an event that's at the hotel, absolutely, that'd be a non-guest account. Okay. Typically, those non-guest accounts get switched over to the accounting office to deal with, whereas the guest accounts, the front office is going to be the one who kind of processes those and follows up with those. All right, so folios. This is just the basic term of an individual account for a guest or a non-guest. Everyone has a folio. The folios have a specific number to them. So as we move from the reservation, to the arrival stage, the pre-arrival stage to the arrival stage, then they're associated with a folio number. Okay, that reservation account is then transferred over into a folio number. Those are specific. It helps us with our accounting. It helps us look and identify different accounts. If a guest is calling to dispute a charge, we can look up that folio number and we can have access to that. Okay, so it's just basically that T account that we just did by hand. A folio just tracks all of that information. Okay, questions about that? What a folio is? No? Okay. Whenever we add something, or like we call it posting to an account. We post the folio. So I post your charge of your restaurant to your folio. I post your payment to your folio. It doesn't matter if we're talking about debits or credits. Posting is that kind of general term of when we make adjustments to the folio. So we post the room and tax every night to the folio. That's done during that night audit process. We post any payments that are made. We post any other things, sales that have happened at different point of sales throughout the hotel. We just basically call it posting to the folio. We post it to the account. Okay. When something is posted, we're able to identify where it came from, who posted it. I mean, who signed for it. If they're charging to the guest room, say for the golf club, the golf course, or the sundry shop, things like that. We even will post. So, for example, let's say I just stop at the front desk and I go to the sundries. I get a bottle of water, and I pay $2 cash for that. I'm going to post the $2 charge, and then I'm going to post a $2 cash payment on the folio. So that way I can track and see where that water actually went, and so it shows that was paid right away, but at least that way I can balance my credits and my debits, okay? Recording that. All right, so the different types of folios we have. The guest folio is tied to one guest room, okay? So if I'm staying, like tomorrow, I have to go to a conference in Austin. And so I will have a guest folio. Actually, I won't. Let me back up for a moment. Okay. I'll have a guest folio for any kind of incidental charges. I think I have to pay for my parking. But the conference that I'm going to has a master folio. They are paying for my room and tax. Well, it's an education conference, so they're not paying tax. But they're paying for my room rate. Okay. And so those master folios are used for multiple rooms. All the different charges can be funneled to that one master folio that can be paid all at once. Okay. We talked about that in a previous lesson about the different types of master folios we have in the group accounts. So what's one example of a group account of how they handle a master folio? Yeah.
The group might be paying for your room, but you have to pay for the incidentals.
Exactly. So the group pays for the room rate, but you, the guests, are responsible for the incidentals. What's another example? What's the best example for the attendees? The group pays for everything, right? If I go and I don't have to pay for anything, that's the best scenario for me, okay, as a guest. The other thing is where other people, again, if they might be part of a group, but we would still all have our own individual folios because we're still responsible for paying for our own room rate and then our own incidentals. There still might be one master folio for the group because if they charge for the meeting space, if they charge for any food and beverage, then that would go onto that master folio. Okay. Non-guest or semi-permanent folios, those are people that are using the things that are not associated with sleeping rooms, okay? The next one is employee folios. So what's an example of a type of employee, a position within the hotel that would have charge privileges? What do you think? What? Concierge. The concierge might, okay. Good. What else? The supply, okay, so they're gonna have accounts, like to buy all the supplies for the hotel, like purchasing. Is that what you mean? Yeah. Okay, yeah. So purchasing will have an account.
How about when would one individual have one?
Well, the director of pretty much the director of purchasing would have access to charge to that account. Okay, good. There's one person that I'm thinking of that y'all haven't mentioned yet. Director of food and beverage might have one. Well, obviously the GM. Anybody else?
Chef?
The chef might. Let's think about our organizational chart. Who have we not mentioned? Sales. Okay. So salespeople often will have, if they have to entertain a client, they may have people over to the restaurant and they'll comp that meal, right? The guests that they're welcoming or they're, entertaining that particular time are not going to pay for the meal, but it needs to go to some kind of account, okay? And so sales definitely would have that employee folio. And typically the employee folio would also regulate what exactly or designate what they can charge. If they have charge privileges at the restaurant or charge privileges for room and tax or whatever, they'll have that, okay? Permanent folios, things like our credit card companies that we're gonna have a permanent account with, we do a lot of business with, we're gonna have that to be able to track that. And then split folios. What was an example? We've talked about it before, but what's an example if somebody would ask for a split folio? Danny.
When they have their room paid for by their company and they have their other card for any other expenditure.
Okay, so close, almost there. They are still responsible for their paying for their room tax, but they're going to use they're going to have two different payments, right? So for example, if I travel First Alamo Colleges, then they'll pay, that's built into my travel budget that I'm allowed to spend for my room, but not my food and beverage. And so I get two receipts. So I can submit one receipt that's just my room and tax, and then one receipt that is mine that I pay for myself with my my other personal card. Okay. If your company has if you have a business card for your company, you might also do that as well, where you can pay for your room and tax with your business card, but then your incidentals, your food and beverage, things like that, if it's not covered under your particular travel plan, then you would pay for that individually. Jackie.
Usually when two people are sharing the same room.
Absolutely. So if some people are sharing a room and you want to actually make two different payments, you can actually split that into two different folios. Now, when you do a split folio, is the first part of it the same, or is it two completely different numbers?
Usually we have one primary and then the other secondary.
And it's attached to that primary one. It's identified. Okay, excellent. I couldn't remember. It's been a while. I thought for some reason in my mind, I'm thinking it's like 501A, 501B would be like the same. I don't know.
There was one case where they had similar names,
Okay.
and then the GSAs aren't allowed to see the name on the credit card, and then they both had like Visa, so there was like a dispute that like it was meant to be from my charge, and I had to move things over.
Okay, excellent. All right, the voucher details, okay? So this is about how we kind of post different transactions to the different accounts, okay? And so our vouchers are basically how we track all those different payments or different, if we need to charge something to account, add it to the debit side, or if we need to add it to the credit side. In a property management system that's automated, everything is sent directly to, okay? So for example, I stayed at a DoubleTree up in Austin about a year or so ago, and I ate breakfast and I was ready to go. I mean, I didn't really want to eat breakfast, but I was like $10 and it was cheaper for me to eat a $10 buffet than to go somewhere else and pay for breakfast, right? And so I was all packed up, ready to go. I had my bag with me when I went to breakfast. Because everything's automated and everything talks to each other, but by the time I walked from the restaurant over to the front desk to check out, that charge had already posted to my account, okay? But then there's other times where, let's say you have an independent restaurant that's just renting space in your hotel. Sometimes we need to wait until we get those actual vouchers, those charge vouchers, to post that to the account. And so there's a different situation for a lot of different things. And we'll talk about, you'll see later on in the slideshow, you'll see how I've bolded different vouchers and different examples of when we use specific vouchers. So points of sales, we've already talked about this. It's just basically where we can make a sale. It's a point of sale. It can be our gift shop. It can be the golf course. It can be the spa. It can be the mini bar in the room. It can be really anything that we're going to make a sale. It's the point of sale, okay? Typically, we have things that talk to each other. Our property management system will talk to each other so we can post those accounts. So here we're going to talk about those different ledgers that we have. First is the guest ledger. It accounts for every charge that the guest has made, every posting to their folio. Okay. We are going to be the ones, the front desk, who close out that guest account. Okay, we're going to finalize that payment. The city ledger is for those non-guest accounts, and then the accounting department will collect on all of those city ledgers. Okay, so what would be an example of a non-guest account that would be on a ledger, on the city ledger? What would be an example of an account that would be on the city ledger that is a non-guest account?
Is it anything like using the restaurant or
Yeah, good.
anything they're not sleeping in?
Right. So the guest is going to pay for their restaurant, right, whether with cash or with credit cards, okay? They pay for a credit card, then that goes onto that city ledger, and then our finance team, our accounting team has to then collect that money from the credit card company. The guest has deferred that payment by using a credit card, okay? Same thing if we have a group in-house and they're charging, we're going to collect on that group that had their meeting. If they are a wedding, but they're not actually using sleeping rooms, then our sales department is going to have that account that our finance team is going to collect on, okay? When we create an account, it's important that we have the accurate credit card number. That's why oftentimes we'll do a swipe of the card. Of course, somebody, when they make a reservation, they have a card that they put it on hold, and they're not going to charge it right then unless it's a prepayment or there is some kind of deposit required for the reservation. But when we come in, they could either just verify that number, but the best thing to do is do a swipe, a physical swipe. Why is it important to do a physical swipe to establish that?
Because some credit cards can be like duplicated. They can have like the same number as the other credit card that you actually stole information from.
Okay.
So if you don't swipe it, that magnetic strip might not go through.
So swiping it actually gives you the ability to test whether it's a stolen credit card or it's a valid credit card. Okay. I think I've told this example before, the Embassy Suites up in Dallas, where I stayed a couple years ago for spring break, which I will never do again. But you know, at that time, I think I was a silver member for Hilton Honors, and I had to stop by the front desk to do a physical swipe of my card, which I had never done before. Using the digital key, I was able just to go right to my room. But through my conversation with him, which he probably should not have told me that they had issues with fraud at that hotel. But then I was like, okay, this is interesting. Tell me more. Basically, what would happen is with the Hilton Honors and the digital key, they don't actually run and process the credit card until you check out. And so if they don't do a physical swipe, then they can't tell that credit card number is invalid or stolen. And so they've pretty much decided that if you're a gold member or what is it, diamond? Okay, if you're gold or diamond and you've reached that level, then you're probably not using a stolen credit card. But if you are blue or silver, which sometimes if to get people to sign up, they'll give them automatic silver status. If you're a brand new person that just signed up, then that credit card number that's tied to your account could be potentially stolen, okay? And
those kind of apps, like the Marriott Envoy app as well, like even though you put like the credit card information, like it won't do nothing. Like like there's no way to verify if it actually belongs to you or not.
Exactly. And so that particular hotel, what they decided was anyone that is silver or below, they required them to stop by the front desk to do a physical swipe. And that would then prevent them from finding out later on that this person has checked in using the digital key, they've enjoyed the room, they've checked out, and now we process their card and it's stolen and we can't collect payment on that. Okay? So we want to make sure that everything is done. All that stuff from the reservation, the name, the address, the phone number, all that contact information is transferred over to the folio when the guest checks in as we establish that. The best part about everything being automated and electronic is that the different parts of the property management system, all those POS, point of sales areas, talk to each other and automatically add and get connected to the folio. Thank you. Okay. Do we always just trust our computers? No, we still need to go through and double check to make sure that, and we'll talk about it in tonight audit chapter 11, we need to make sure that the room rate is correct. We need to make sure that all the posts are actually correct. When somebody's putting in the room number to charge to the account, we have to make sure that that actually goes to the right folio, because the guest might write really sloppily, and their 5 might look like an 8, and the server puts in a room 1158 when it should be 1155. Now, of course, there are other double checks. So when we put in 1158, our POS should tell us, is this the last name? Well, if that person has horrible handwriting, or if it's a very similar last name, or maybe there are family members and it is the last name, you'd be like, yes, that's right. Well, no, we need to make sure that those posts, people are going to, we have to be ready for people to dispute those charges, and we have to understand why the charges were made that way. Okay, charging privileges. So speaking of charging privileges, if I want to charge to the room, I have to have what? Right, we have to have a credit established with the hotel. How do our guests establish credit with the hotel? Okay, so yeah, we swipe their credit card and we're pre-authorizing a certain amount. Okay, so those of you who work at hotels, when you swipe a card, what do you pre-authorize? What is the amount that you pre-authorize? Room and tax plus incidentals. Is it room and tax for the entire stay? Okay, so room and tax for the entire stay plus incidentals. Is it incidentals by the day, or is it a flat fee for incidentals?
It's going to be by the entire stay.
By the entire time? Okay, so it's the same whether I stay for 1 day or 5 days. You charge the same. You pre-authorize the same amount for incidentals.
Yeah. Well,
We have $50
in our place
per day.
20 miles per day. So if you stay like 3 days, it's going to be
$60. Okay, yeah. So and then you do 50.
Ours is 50 because our valet is 45 plus tax, so it's up to 47.
Okay. Excellent. And so again, depending on the hotel, the different level of service, if you're a select service hotel, you may not need to pre-authorize a whole lot. If you have complimentary breakfast, if you have complimentary parking, if all you have is a sundries and in-room movies, then you maybe don't need to pre-authorize as much. Whereas if you're a full service hotel or like a resort that has additional expensive amenities, then you are going to pre-authorize a little bit more. The resort that I stayed at in Tucson for a couple nights on my way home from my trip to San Diego was really interesting because they had I think it was a $50 resort fee per day. And I thought that's really interesting. I mean, resort fees, whenever you go to a resort, there's always a resort fee, right? But this hotel actually put in every room a little sign that says, this is what your resort fee pays for. You get 2 bottles of water, please stay hydrated, okay? You get 2-hour access to a bicycle to go on our biking trails. You have an hour access to this, and whether I use it or not, I'm paying the resort fee. But basically what they're trying to say is this is available to you, rather than us just say, oh, we're going to charge you $50. They're going to say this is what you get for that $50, which normally if you were to spend 2 hours on a bicycle, this is what it would cost. Normally if you were to spend an hour doing this, this is what it would cost. And so they kind of showed you that value of why, because I think a lot of times people who are used to staying at resorts probably understand the need to pay a resort fee. But then people who maybe are not accustomed to doing that might say, well, why are you charging me this $50 fee? That seems outrageous. Well, this is what your $50 fee gets you as part of that. So
AW Marriott does room and tags for resort fees was $100.
Yeah, absolutely. Yeah, when I stayed at the San Luis Resort for this conference in November, yeah, I think I was there for 3 nights, and then I walked away from the check-in, and I got a text message from Visa that an authorization has been made on my card for $750 for 3 nights, and that was the room and tax. That was the $50 a day resort fee plus incidentals. Yeah. Mm-hmm.
Now, if I remember correctly, if someone's paying with cash, you just say no incidentals are authorized. Is that correct?
Wonderful segue.
Oh,
All right. Thank you so much. Absolutely. So they pay with cash. We call them pay in advance guests, PIA guests. Okay. And we have basically they have no charge privileges.
Right.
Absolutely. So that's in our property management system. We can change the status of their account to no post, which means they cannot post to their account.
So could you do that with someone who has a card that says, I don't want to do any incidentals? Or no?
No,
You could, absolutely. So like, let's say, when I was at La Quinta, I would have parents that are coming in, but they don't want their kids to charge movies to the room. So I could actually turn that charge privilege off for that specific room, so that they could not do that. So even though you're paying with your credit card, you still can request that.
I have a credit card for an organization, and so I pay for their rooms. And so sometimes I have to send in it's like, I don't know what you call it, but I send them the information, the approval, because I'm not going to be there.
Okay.
And I get to mark what they get, like tax, room tax, valet. And so one of the people always says, well, I never do incidentals. I just put incidentals on my own card. And I was like, well, we don't do incidentals. So I was like, can't you just tell them no? But he's like, I don't know. They want he doesn't like it because then he has to put his own card on there for
Right.
incidentals. So always tries to get me to do the incidentals. So I was like, I don't think so.
So you're saying to turn off the incidentals?
Yeah.
Well, just tell him to ask but he does use incidentals.
No, I don't know.
Okay. Well, just ask him to do a split folio.
Okay.
Just ask him to do a split folio, and that will resolve everything.
Okay, because he always says, well, then I put my own card on there for incidentals.
Right.
that thing of turning off incidentals is really not done anymore.
No?
Oh, okay.
What they do with the cash, well, this is my hotel, and, select service hotels from Marriott process. The procedure is you pay the room and tax plus $300 in cash as well. That's security deposit for the entire stay, not really.
Right.
For the entire stay.
And then they get that back when they check out.
Back, and, housekeeping goes check the room, if everything is good, nothing is bad, then, we're going to keep the $300 back.
And it's almost
Okay.
always for him in a convention hotel, so I don't know if it's more there or no,
Yeah.
because he normally goes to conventions and whatnot.
Right.
So,
For our guests especially, we have a lot of groups that come in and they're sharing charges, or teachers that have really limited budgets. We let them know if they are putting incidentals, they have strict, we have the payment in advance, we get the posting for the check that covers their stay, and then we make the cash deposit, and we only allow them to charge within that amount. And then once they go over, worst case scenario, we put like a lockout, and we have to have contact us so we can pay.
What about you guys?
I just personally rather not take cash payment because I don't want to be reliable with anything, and we always have to have security method of payment. It's just like if they damage something, $300 in cash is not going to cover what this damage. We have to authorize a card.
Okay, even if they're paying with cash.
So cash is upon checkout, so we
Right.
can authorize with the card, room and tax, and then they can pay upon checkout with cash.
And then just release that hold on the card. Absolutely.
You're in a lot, you're in a lot of breaks whenever you pay with cash. So usually whenever you mention them, that they're gonna have to give $300 in cash additional to the room and tax, you're like, oh, no, here's my card.
Gotcha. Okay. Cool. Yeah, and so as long as you explain to them that they can still pay with the cash at the end, I just want to hold that for the, yeah, absolutely. Cool. Any other questions about that? So as we're talking about monitoring the credit that our guests have, we have two different types. We have the floor limit that's set by the credit card company, and the house limit that's set by our hotel. So our house limit is collecting that additional $50 or additional $100 for incidentals. That's our house limit, okay? So if a guest is start charging up to their room, and then all of a sudden they're getting close to that house limit, then we're gonna we're definitely gonna request them to come down and either reauthorize the account. If they've gone over that, then we might do what's called a lockout. Do y'all remember a lockout where we're talking about the different room statuses? What is lockout? Gabriella, do you remember what lockout was? What does it sound like?
When they don't pay and do the,
Yeah, they get locked out of their room. We can basically cancel out their keys, so they have to come down to the front desk to get a rekeyed. And then we'll explain at that time, you've met your limit, or you've exceeded your limit, and we need you to reauthorize your card before we reissue a key. So it's just basically a way. It's for them they're going to come down to the front desk. The door is not going to start like lock out. It's not going to start doing that, right? Their key is just not going to work. And so they're going to come to the front desk and say, hey, I'm having issues with my key. My key's not working. And then you look up on the system, oh, okay, Mrs. Smith, this is the reason why we need to go ahead and pre-authorize, because you've charged to the room and it's getting close to the pre-authorized amount. We need to reauthorize would you like to reauthorize a larger amount? And Mrs. Smith can say yes, or she can say, no, I'm going to stop charging to my room, okay? It's just a kind of a way for us to bring that to their. So those high-risk accounts, we'll talk about, this will come up again in Chapter 11, those high-risk accounts, we might have to call the company to increase that floor limit so that we can charge, or we definitely need to, like you said, have the guest come down and make a partial payment so that at the end, we don't have to make that giant, large one lump payment, so they pay along the way. All right. The last thing during that departure phase of the guest cycle, that's when we present the guest folio, the receipt to them, and they can double check to make sure everything looks good before we actually charge and post the payment. So our basic formula, which is, it's basic math, it's addition and subtraction. It's essentially that T account, our previous balance, plus all the debits minus our credits. That's exactly what we just did. On October 1st, that example that we worked on earlier, on October 1st, what was our previous balance? When the guest checked in, what was their previous balance? 0. They had no balance. Okay? And so our previous balance for October 1st was 0. And then we add our debits of the payments, okay, the $116 plus our valet for $25. And so our net outstanding balance, at that point we hadn't paid anything yet. So our net outstanding balance was that total amount. Then we come to October 2nd, and they've charged the room, they've done all this stuff. We add that. If they haven't paid yet, then our still net outstanding balance is that total amount, okay? So that's our basic formula. Debits minus the credits gives us our total balance. It's really important for us to kind of keep track of all the different charges, different accounts, to make sure that everything is going where it needs to go. That's going to make the end result, when the guest checks out, a lot easier, a lot faster. If there's a dispute on something, so one of the hotels that I've worked with downtown, their valet is not connected to their property management system. They actually have the vouchers for the valet, okay? And so if that valet does not return those vouchers to the front desk the night all the guests check in, then we can't post those charges to the accounts. Same thing with the guest is staying multiple nights. We want to make sure that the valet is writing on that voucher when the check-in date is and the check-out date, so we can post the valet charges every single day. Because we have to pay the valet company. That's going to be an account payable in our accounting system. We have to pay that valet company, and they're going to say, well, we had this car for 3 days. So we need to make sure that we collect payment for all 3 days of that reservation. So these are our different types of transactions that we're going to have. We're going to go through each one of these, and this is where we're going to start introducing some of those vouchers. So if someone makes a cash payment on their account, okay, I go to the sundry shop, I get a bottle of water and a bag of chips, and you charge me $6, I pay $6 cash. I have a voucher that shows that transaction, okay? It may go directly into the computer. If I'm going to pay, bless you, if I'm going to pay cash for something somewhere else in the hotel, there's going to be a voucher that's going to showcase that, okay? So I can see. Basically, it's just an opportunity for us at the front office to show that we have received cash. It's just kind of basically a paper trail, okay? A charge purchase, the same thing for a charge voucher. So if somebody makes a charge to the restaurant, if they make a charge to the gift shop, okay, they're not a guest of the hotel or whatever. If the gift shop is independently owned and not operated by the hotel, okay, they're going to give me all of those charge vouchers. Essentially, the hotel I was working with downtown, I just mentioned, the restaurant would bring in all of the receipts. So they would have those charge purchases, either the credit card that were charged to the rooms. It would have the room number, the guest name, just to make sure that we post it to the appropriate account, okay? We might actually have to have an account correction. So if we need to move something from one account to another, or if we have a guest that was unhappy, we had a lapse in our guest service, we might have to actually correct that. Typically, a correction needs the management's signature and management's approval. Okay, you can't, unless you've been empowered to, but there's going to be some kind of voucher, there's going to be some kind of paper trail as to why, an explanation as to why we're comping this room. Okay, what was that? Service recovery, guest service recovery, okay? There's going to be a reason why. The manager, doesn't mean the manager doesn't need to know about it, okay? They still need to know about it. You may have the authorization, you might be empowered to go ahead and correct it right then and there. But there also needs to be some kind of paper trail or some kind of documentation as to why you're doing that. Why is it important to know how many times we have to comp something because of guest service recovery? Why would that be important? Danny?
Because it means that you're not doing a good job in retaining that money.
Good. So we're losing money, but it also gives us an opportunity to see where we're lacking in our guest service. And so that might be an area to focus on, maybe retraining or maybe on coaching certain employees. Is it a certain employee that's having issues with guest service? Or is it just in a department that's having issues with guest service? And so tracking those vouchers is also another way for us to identify where we have issues in our services. So account allowance, two different types. If we need to decrease the folio, if we need to, there's been a posting error after we've closed business, okay? So let's say, when is close of business in a hotel? The night audit is the close of business. And so for every hotel, it's a little bit different. It might be 1 a.m., it might be 2 a.m., okay? typically it's somewhere around 2 a.m. You try to get all of your night audit stuff done, all of your reports, all of your accounting done before 2 a.m. That way your close of business, it stays pretty consistent each day. And so if we accidentally charge somebody for a no-show and we close our business is closed for the day, but then we actually go back and find out the next day the person calls and says, you know, you charged me for my room and tax for one night, but I canceled my reservation. Here's my cancellation number. Then we have to go back and correct that. Well, we can't correct it yet on yesterday's close of business. That's done. We have to correct it on today's close of business, or on today's business, so that at the end of the day, everything is all nice and even and done. So that's that allowance voucher. Transfers. So like Jackie was saying earlier, we need to transfer from one to another, and sometimes that might get a little confusing. But we need to transfer from one folio to another. There needs to be some kind of documentation as to why we did that. How many of y'all do cash advances at your hotels? You do?
Deposits.
What's that?
Advance deposit.
Like to the guest. The guest, rather than going to the ATM machine, they can come to the front desk and get a cash advance from you, and it's charged to their guest account.
Oh, like take out cash.
Yeah.
Oh.
Yeah, I didn't think so.
No.
I didn't think so. When I was reading it, I was like, I don't think this really happens all that much. I mean, I don't know. But a cash advance voucher essentially is saying, Mr. Uminski from room 305 took out a $50 cash advance. I'm going to add that to his folio as a debit of $50 cash in advance. Okay. Most hotels now have ATM machines, so you can kind of like alleviate that. Okay. And so, but again, there are vouchers that track that. The point of a voucher is that it tracks, there's a paper trail, there's a reason as to why we've done something, okay? So these are the internal control functions we do within our hotel, okay, within our department. How many of you have ever worked a night audit shift? Okay, how fun is night audit?
Free food.
A lot of free food? How do you get free food for night audit?
Just right into the restaurant.
You sneak in the restaurant?
Yeah, you can do that.
We can't.
Okay, let's talk about our QEP for a moment, our ethical decision making. Okay. All right, so I was thinking like sometimes the guests, because usually if I'm staying somewhere and I'm coming in at 2 o'clock in the morning, of course I've stopped at Whataburger, so I'm gonna bring like an apple pie or something for the front desk agent, just to say, hey, have a wonderful night. Okay, so night audit. What else about night audit? Is it it's pretty tedious. There's a lot of reports.
It's running a lot of reports every night. You just have to be real careful when you watch and not overlooking things, because if you overlook and you missed something, you're an idiot.
Yep. There's definitely a step-by-step process that has to go. Even I know people who've done night audit for years and they still follow that step-by-step process just to make sure that you don't miss anything. You're reviewing all of those transactions. You're reviewing all of these accounts to make sure that everything is accurate. Yes, ma'am.
It's a lot harder, well, we have so many outlets. And then when there's a banquet event and there's different events going on, it's like you have to have different persons assigned to make sure that like food and beverage is taken care of, groups are taken care of, house accounts are taken care of.
And you fix mistakes. I mean, if you have mistakes, it's going to fix yours. You know what I'm saying?
Yeah, absolutely. So before you actually run that and and close business for the day, you want to make sure everything is all ready to go and everything is accurate. Okay.
Typically just one person doing that audit.
It depends. If it's a full service hotel, it's going to have like a overnight manager, an auditor, and a front desk person. It's like service hotels is one person.
Mm-hmm. There are even where you can have a centralized night audit, where one person manages the night audit remotely for different properties.
Would that be like from resort or like a chain?
It would probably definitely either be a chain or be a situation where like you are a management company.
Property management.
Yeah. And so you would manage multiple properties, and all that property management system would be all connected, and you can remote in and do all of that. Okay. Cash banks. So typically at the front desk we have a cash bank. Servers, things like that, we have a cash bank. And different hotels handle cash banks a little bit differently. The La Quinta, where I worked, we had 2 cash drawers that had $100 in them. Okay, at the beginning of the shift, I had to count that $100 to verify that I had $100 in there. The person that was ending their shift, they had to count everything and pull out everything to return it back to $100. And then they would make that deposit into the safe as part of their shift. And then I'd have to count it to make sure that it actually is 100, that I start with 100, and I sign off on it, they sign off on it, and we're good to go. There's other hotels where you have a bank that's assigned to you, and you go to the accounting office and you get your bank. So think about, I don't know if you've ever noticed this before or not. If you haven't, you probably will in the future. HEB. Okay, at a grocery store, they have like this big giant case up in the front, or maybe it's out back by the employee area, and that cashier has their key, and they go in and they pull out their cash drawer. And when somebody goes on break, they take their cash drawer, and another person puts their cash drawer in, okay? They have their own personal banks. And so depending on what your role is, your bank's going to be set to a specific amount. And then the goal is, at the end of the day, that you're going to take all of your transactions. So as a server, I'd print my receipt at the end of the day into my shift, and I would back out the amount that my original bank was, and whatever I have left is supposed to equal all the sales that I made. Okay, I want to make sure that I don't have too much cash or I don't have too little cash. Okay, so I want to track those transactions. Okay. Does that make sense? Let me do a quick example. Okay, if my cash bank is $100, so I start with 100, and then throughout the day, I've sold different things like that, sodas, chips, something very small. Let's say I did $50 in sales. Well, when I count back, I'll count out my cash drawer, I pull everything out and I count everything up. I take out my $100, and when I actually count everything out, it turns out that I only have $45 in cash. So am I short or over? I'm short. I should have $50, but I'm short $5, so I have to figure out where that $5 is. Okay? I might have to pull it out of my wallet to make it balance, okay? I might, there's got to be some different reason why, okay? It might be sometimes like if I charge something as a server and then I forget to void it off, so I put it on there and then I actually had to comp it off or whatever. If I didn't void it, then I still looks like I still need to owe that, but I need to go back and figure that out. So it's your opportunity to figure out. Now, if you have $5 extra, what do? Think about our QEP, our ethical decision making. You drop it with your deposit, okay? Or you can think, oh wait, I remember this. I was really busy. I had a long line of guests to check in, and this person got a bag of chips and a soda, and they gave me a $5 bill, and I was just really hurried, so I just put it in the cash drawer, and I just kept going. So then you can go back and add a charge for a soda and a bag of chips, and then you can balance out your account that way.
That's fraud right there.
Yeah, but I was just gonna say, last night, closing up for the restaurant, there was a paid out that wasn't accounted for, and so, I'm going all night long, I'm trying to figure out why I'm short, and then finally get in touch with the manager in the morning, and, oh yeah, I forgot to do that paid out, so it's really important to stay on top of it.
Absolutely.
The reason why I can explain to you what that is fraud is because that actually got into an associate, that he got like over $50. And he couldn't figure it out. The reason why he was over $50. So he was like, you know what? Okay, I'm just gonna pretend that I sold this and that, but it's worth $50. That way, I'm not over that.
Right.
turns out the next day, the manager comes out and, oh, I forgot $15. Or those $15 now, because they were supposed to be
Right.
over this $15, but because he, pretended that he saw that
Right.
to make it even, they found out.
No, I get what your situation is, but my situation is slightly different. If I remembered that I did that,
Oh,
if I remember that I actually did that, then you can go ahead and go back and do it. But yes, no, if you didn't do it, you can't just say, oh yeah, Sally sold a bag of chips and a soda. You can't say that. You would just drop it over as a $5 overage. But if you remember that you did that because you were crazy busy and that person, you didn't want that person to wait just to buy a bag of chips and a soda. Like, have you ever been in that situation where you're sitting there at the front desk, there's people waiting to check in, they're like sitting there staring at you off to the side, and you're just like, you know what, just thank you, have a wonderful day, that's $5, and then you put it in the drawer and you move on.
Yeah.
So,
you know for a fact that
Yeah.
really saw that.
absolutely. So the bank should be kept in a specific designated location, whether it's actually in the accounting office or if that's a place to do a deposit, to drop your bank at the La Quinta where I was. We had little tubes that we put our receipts in with our cash, and we drop it into the safe, and then the manager would open it in the morning and pull all those deposits out and balance everything. Okay, and then of course then we want to make sure that that bank is back to the original limit. What's up?
I think because for years, there was an employee that had a bank and they would treat it like their own bank. And then whenever they would be periodically checking their bank, they'd be like, hey, can I borrow like 35? I'm a little short. And it's like, what? What? And like, I would always decline. I'm glad I always decline. Like, I'm not going to give you $35 from my bank, because they get some other associate, but they both ended up getting fired because they found out he was using it as a personal bank.
That's interesting.
I just want to count it. Make it
Wow.
like,
So again, all of our net cash receipts, all of our total receipts should equal up to the cash that we are selling, or the amount that we sold. As a server, sometimes we have an overage as far as the amount of cash we have in hand, and that's because those are our tips. Okay, and so that would come out as our tips. That's why we would have an overage in cash. Okay, but if we do have an overage at to the front desk, those are not tips. Okay, there's got to be something to account for that, and we're gonna go ahead and deposit that into our deposit. Okay, we also have shortages in due-backs. So if we have a situation like, let's say our hotel did allow us to do cash advances, then if I did a cash advance for $25 to a guest, I'm not actually, there's no charge for that. There's a cash advance voucher for it, but there's no product receipt for it, and so I'm actually going to be short. I may not have enough to get me back up to my $100. And so as a result, I need to have a due back from the accounting office to get me back up to that $100. Same thing happens, like maybe we have, maybe we don't have a petty cash account, but I need to run to HEB to get some things for the breakfast area. That receipt, I'm going to pull out of my cash drawer to get them, $50 to go to HEB to get that stuff, and they're going to come back with the change plus the actual receipt, so that total needs to add up to $50. But I can't get back up to my $100 because I've given cash out. And so the accounting office is going to put me back up to that $100, but that's going to count as a due back. They need to owe me that extra money basically from the receipt. Okay? What's that?
Usually have to do that happen on the weekend.
Due backs on the weekends?
Yeah.
But if that's considered a payout, then wouldn't it be accounted for? I mean, like we do payouts all the time, and so it's noted in our record that we spent this money and that it should be there. I mean, so how would you be short?
So, okay, well, so here's another example. If, let's say I've had no sales at all for the day. Nobody came to buy soda or chips, right? And so I have no cash, or everybody charged everything to their room, so I'm not taking any cash in. but then you've taken money out to go do a quick run for groceries or whatever, then I'm not gonna have that cash to get back up to the $100.
So you're.
But you're right, if
You're
I,
paying cash forward and you gotta do cash in.
if I had done cash sales, then that would have traced on my total final deposit, and I could have possibly get back up to my $100. But if I have done no cash sales, then I don't have that available to that. Yes.
Also, with receiving cash, like especially for valet, and the time of like, say somebody takes it in, they stay one night, and then check out, there's a new shift, they want their change back. So, because they made the $50 deposit for the incidentals, and then they want it back. So then they have the employee that didn't do the transaction, now they have a due back of $50 because they have to give that guest their $50 that they deposited for their account. So then that makes them short for their bank.
Okay. Excellent. Very good
And
point.
that happens on the weekends.
Yeah.
So we're short, like, so we have to tell, as long as we keep all the transactions, we tell accounting, look, this is what happened, so we get our bank back.
Yeah. Okay.
That's what they
Awesome.
received, like, it was basically cash.
Yeah. The receipt and the vouchers, all of that basically tracks all of those transactions. Okay. All right. We are almost there. But it's so important. Okay. So we have audits. So we do audits on a regular basis. Our night audit does our daily stuff, and then we also have audits that whether it's part of the company, whether it's part of the brand, they're going to come in and usually they're unannounced. Oftentimes you might know who the auditor is, whether it's our audit for just our back office accounts, or if it's an audit for that's going to come in to make sure we're upholding our brand standards. They might use an alias, and so they just randomly show up one day to make sure you're keeping all the brand standards up. But if you see that, it's like, oh, I see that person's name. I know that they're going to check into my hotel. We want to make sure that that person's room is perfect. We want to make sure, of course we want to make sure all of our guest rooms are perfect. But as hoteliers, we want to make sure that we're passing those inspections and those different audits, okay?
Initially, the financial auditor lets you know whether they going over the like the brand standard.
Yeah, I had one time my AGM, because I told you about the issue I had with the pleats in my pants at La Quinta. I just couldn't do it. And so I had some other khaki pants, and they were express, and they were more like boot fit. They looked like jeans. They really did. They had a darker stitching, and they had the fifth pocket, but they were a khaki material. And so I remember one day my AGM walks up to me, and she's like, "Can I touch your pants?" And I said, of course I knew her, so it wasn't like a awkward, it still was awkward, but I said, no. And then she said, well, our brand standard is here. They're inspecting the hotel, and those are not brand standard pants. And she's like, so I need to understand why you've been here for 4 months and you're not wearing the brand standard pants. And I was like, well, how have I been here for 4 months and you haven't noticed that I'm not? But I didn't say it out loud. I did not say it out loud. Just like sometimes with our guests, what we think we want to say, we don't. We make it stop, and then we just close our mouth and nod our head. Yeah. And I said, well, because it has pleats, and I don't want to wear pleats. I also knew I wasn't going to be there much longer anyways. I know it's horrible, but yeah. But then I also thought about it too. I was like, the night audit person has this ratty old La Quinta sweater that has holes in it, and you're complaining about my pants that look nice, but they're not brand standard. But that's because I wasn't a manager back then. I didn't have that manager hat on. I wasn't looking at that perspective. But we want to make sure we're passing those types of inspections and the different audits so that we That's why it's important to stay with our night audit and make sure that we are keeping up and everything is staying accurate so we don't come to a major audit and have major concerns and major issues to try to figure out. It's easier to go back and figure out why yesterday didn't balance out than try to figure out why 4 months ago it didn't balance out. So that's why we do that night audit, to make sure that we review that information on a daily basis, okay? We definitely want to make sure that everything is balanced out. And by I say balanced out, every account is back to what? 0. Our net balance is 0. So we start with 0 and we end with 0. So we've added all of our debits, and then our credits equal the amount of total debit. So everything is back to 0. Okay? So we want to make sure that we're settled. That's what we talk about, settling our accounts. Our non-guest accounts are settled usually between 50 to 30 days. So have y'all ever seen an invoice that says net 30? I mean, you've never seen something like that before, and if you haven't, it's okay. So oftentimes, like if we're sending an invoice out to a client, let's say Whataburger is having all of their managers come to our hotel for a week for their Whata games, okay? When I send that final invoice to Whataburger, it's probably going to say, oh my gosh, what is up with these? It'll probably say like net 30, or it'll say net 15. And essentially what that's telling this person that is due is that they have 30 days to pay the balance, to pay the net. They have 15 days to pay the net. So when I receive a bill from my vendors, from my linen vendor, when I receive a bill or an invoice from my food and beverage vendors, it's also going to say net 15 or net 30. It's going to say it somewhere towards the top within all the information. Yeah, it'll say what that net is, okay? So this is something that I'm charging to the guest, right? This is Whataburger, it's net 30. Which account does this come into? Does it come into our receivable or our payable? So if Whataburger is paying me, the hotel, I'm charging Whataburger for their whole thing. That comes into my receivable account because I'm expecting to receive that money. If Cisco is charging me for all the food that I created to create the event for Whataburger, I expect to pay that bill. So a receivable is money that's due for me that I have charged to the guest. Payable is my vendors that I have to pay. It's basically my bills as a hotel, okay? And those are part of those city ledgers. The city ledgers have the accounts receivable and accounts payable. We already know about late charges. Sometimes we have to do that account adjustment if a late charge has happened, or if we accidentally charge a guest for room and tax without as a no-show when they actually did have a cancellation number. What are some other examples of why you would have to adjust an account? Those of you who worked in hotels. Discrepancy like what? So if the wrong guest was accidentally charged, you have to do an adjustment to that. Okay, what else? Anything else? What's y'all? What's that? Laundry? Oh, disputing the charge. Gotcha. Like the laundry they send out. Okay. All right. Sometimes you hear it all.
Yeah.
Sometimes you're just like, wait, you're what? You're disputing what charge? Okay. Let's figure this out. How can we reach an amenable decision where the hotel's not getting screwed, but you also as the guest are.
You can also waive if they're departing early or the departure.
Okay. So if they've left early, then all those late charges.
Yeah, like you can omit normally this is like an early
Oh, gotcha, I see what you're saying.
So we can make.
So you can
it
waive that, you can adjust it, so the computer's gonna charge it,
Oh, okay, now like, I guess especially if there was like a group.
yeah. Okay, excellent. Very good, very good. Any other questions, comments, concerns about different accounts and different financing and accounting in the front office? No? All right.